Hello everyone, welcome back for what is going to be nothing short of another jam-packed daily cryptocurrency market update with yours truly. As always, we have a lot to get into and we're going to be diving straight into it. We're going to be starting things off in regards to the macro. This week has been a particularly volatile one, obviously kicking things off on Friday with the non-farm payroll number and of course the unemployment data. Then of course we had the mass unwinding of the yen carry trade, and that has caused contagion in the markets. Of course, the cryptocurrency space has bared the brunt of it, but we've made sure to come out and put our best foot forward and to continue to reiterate that actually the good news here is it probably had, or most likely had, a lot to do the price action that we saw on Monday with the yen carry trade. And if that is the case, the broader macro context of things is still a great picture for risk assets generally. And we're going to be starting the video off there. We're going to be hearing a tape from Jim Bianco. We'll be talking about a little bit of economic data that is still to come out this week. And then we're going to be diving straight into the cryptocurrency space. We have got news from the Democrats in regards to Harris now launching a Crypto for Harris campaign, obviously in combat with Trump's appearances at the Bitcoin conferences and his kind of appeal to crypto voters. And there's a lot of people out there that will be single issue voters. And of course, the Democrats are going to try and capture this. Also, we've got huge news from the SEC in regards to the Ripple, Brad and Chris case. We'll be diving into that. We'll be talking about a US tax-free Bitcoin zone. And then we're going to be looking at some news from Morgan Stanley. Well, yesterday, we looked at the fact that not only did we see some record inflows in regards to Binance in the form of cash actually buying the dip, we also had news from JP Morgan and Goldman Sachs that institutions actually bought yesterday's or the week's downside. They bought the dip. Literally, it's quite a crypto sort of term, but we saw this on the broader sort of markets. And that gives us a degree of confidence in regards to the direction that things are going. And we're already very bullish. Yes, this was, to put it mildly, a spanner in the works, but it's an explainable spanner. We know where it came from. And actually, I think is going to be quite healthy. Sometimes markets need to kind of deleverage in order to go up. They need to go down in order to go up, if that makes sense. So let's get into it all, guys. And let's start things off with a quick take from Jim Bianco. He says a lot of the hyperventilation about a crashing economy last week was based on three measures. So the shockingly weak payroll report, we looked at Kamal's comments on this in regards to actual unemployment isn't at a bad level. Okay, yes, it is upticking. That's the thing to watch. And is that going to be a continued trend? But we also looked at or the non-farm payroll number. Now, non-farm payrolls, you've got to allow for nuance when it comes to looking at these things in regards to the situation that we're in. So they literally locked everybody down, and that obviously had massive ramifications on the economy, both from them doing exactly that, but also them printing the money that they did. And when you've seen that reopening, it kind of explains why we've seen such strong labour statistics. There is going to be a teetering off of that. The question is that teetering off because we're entering a recession? Remember, the S&P will rally within 2 months of a recession. Or is that teetering off because it's kind of the a natural thing in regards to these really hot numbers, and now there's a cooling in them? And of course, Friday we saw an increased probability of recession. Doesn't mean it's likely. There's just an increased chance of it, and you're going to get readjusting as a result of that. And then Monday there was this kind of unwinding of the yen carry chain. Yen has 0% interest rates. People borrow that and they take it elsewhere. And there's a kind of, okay, now we need to sort of swing back a little bit as we see that yen strength, really most notably against the Dixie or the dollar. And actually, I think the yen is going to continue to be strong against the dollar. We think the Dixie's coming down. The Dixie is a index of the dollar versus a basket of currencies. We've got targets for Euro USD, Great British Pound USD, and there's potentially something setting up for yen USD. And ultimately, a weaker dollar should be a good environment. Just like them strengthening the yen with interest rates is seen risk get taken off. That's what we've seen with the dollar getting strengthened. Now them weakening it, it's going to be to more of a degree than what we see with the yen. So the Sham rule getting triggered. He talks about an explanation for this. And the shockingly weak ISM manufacturing employment measures. So what have we learnt this week? Payrolls might have been distorted by Hurricane Burley. Yardian argues this point. We also looked at Tom Lee's comments on this. There's a lot of revisions that went into that payroll number. And of course, the hurricane thing has been brought up, and that could affect it. And if we get a better than expected or improving data on that metric, you watch risk really start to come back on. We're at this beautiful point where the Fed is now going to lower interest rates. This should be good for markets. It's going to lower the Dixie. It's just kind of happened in a sort of volatile or more volatile manner than I think many people would have liked it to have. He also goes on to say, mass immigration distorts the sham rule. As I have argued, the unemployment rate is now a measure of demographic change, not a weak economy. Sham says the same here. So the person who actually came up with this rule also saying the same thing. There's a lot going on in the world. I didn't want to talk about this, but I saw a rather worrying, I think it might have been a Sky News report in regards to the fact that they're now going to start going after people that have shared things on social media in the UK in regards to obviously the riots are taking place. Problem, they've caused an issue. They've wanted and anticipated the reaction, and now they're going to implement their globalist solutions. And it is sickening to see, as somebody who grew up in an extremely, probably one of the most multicultural areas in the UK within the West Midlands, and I'm very proud of that. You know, I grew up alongside everybody, and there was never an issue. Now they've really drummed that issue up, and it's sad to see because both sides of this are being used to fulfill one agenda which doesn't benefit either side, and that's sad. And that really, you know, I don't want to go too deep into that. And then the shockingly weak ISM, the shockingly weak ISM manufacturing employment report was offset this week with a strong ISM non-manufacturing employment report. And that bounced out of that recession zone. And also we looked at the 6th, we had stats on GDP coming out harder than expected. So we think the economy is generally in good standing. And the good news is if it was just to do with the yen unwinding, actually we've seen the BOJ come out very timid after that. That generally is, you know, going to be a good thing. Sometimes, again, you need to go down to go up. And we did say, okay, Nikkei crashed. Crypto, if it was a normal market, you could say it was a crash. But it's crypto, it's volatile. There is going to be, I think, a major recovery on the back end of this. And we still think there's this beautiful bull market to come, and that a SHIT storm doesn't come until later on down the line. That's something we've been saying since the start of 2023. Literally, perfect bottom for Bitcoin. And we've been right up until we're wrong. We're happy to be wrong. It's a learning experience. For me, for example, a little bit of a personal takeaway to all this. I don't know, my hairline might somewhat give away my age, but some people definitely go bald sooner than others. It's the first time I've ever had to deal with the BOJ, certainly since I've been interested in the markets, upping interest rates. So it's a great learning experience, not just for me, but for you guys as well in regards to the ramifications of that. And it also highlights, I think, the effect of the FX markets in regards to the global markets, certainly given the Bank of Japan's position. To come on to crypto very quickly and just take a technical look, I think this is perfect for Bitcoin. Bitcoin up 5.6% today, guys. If you see a speedy recovery, there's lots of gaps opened up on lots of different charts. One of the main things I bought during this dip was actually a crypto mining stock, which we haven't spoke about. We kind of reserve it for patrons for now. You know, I own a number of crypto stocks. Coinbase, we're buying in the $30, $40 range. You know, we've got lots of cryptos, and we're still... The bet is for me that altcoins are going to outperform Bitcoin and stocks, and I'm very much positioned for that. Yes, it's been a bit of a pain since we got in. Lots of chop, lots of sideways. Some coins are up 600% for us at one point. We've given quite a bit of that back. Something like Arweave is what I'm referring to there. But our time will come. We're ahead. We're in very good standing in regards to the Bitcoin's typical cycles, the macro situation. It's all still to come, guys, and I don't want anybody missing out on that opportunity. So Bitcoin, I think, is... very healthy. I think this is going to just essentially, in the broader context of things, is just a pullback in what is a broader uptrend. We've got that $151,000 target still to come. Let's move on to a little bit of crypto news. So the SEC asked $2 billion initially, and the court reduced their demand by 94%, recognizing that they had overplayed their hand. We respect the court's decision and have clarity to continue growing our company. This victory for Ripple, the industry, and the rule of law, the SEC headwinds against the whole of the XRP community are gone. Amen. We've been coming out very zealously for XRP and saying, okay, we understand why people are naffed off. It's gone sideways for a hell of a long time, 7-8 years now, but your time is coming. XRP for me, I'd rather get caught with than without it, to quote Tupac or whoever else said that. Okay? Because it's going to do well. And we've listed a number of reasons. We've been doing videos on it. I know people a lot. There's a lot of you either XRP, using a British reference here, is like Marmite. You love or you hate it. We like it. We think it's going to do very well, and we think it's going to do well for the reasons that we talk about. We'll do an XRP video later on today, really covering this in more detail. Now the dust has settled, and we've let everyone kind of overhype it. We'll give a kind of insight into it. We're getting news that the Democrats. Careful, all in. Launch crypto for Harris campaign to counter Trump's industry appeal. Many in the industry feel the Biden-Harris administration is to blame for crypto being a partisan issue. They're now going to come out in favor. Of course, they're going to do this. It makes sense. The world will adopt blockchains, and the reason is because it simply upgrades the systems that we have. Whether that's payments, whether that's social, whether that's financial, whatever it is, the world will adopt crypto, guys. And you get to speculate on the technology that is going to play such a massive role in tomorrow's world today. It's an amazing opportunity, and I truly do believe that. Also, we're getting news that the US to establish a Bitcoin tax-free zone for the digital economy growth. This was the actual official report. The United States faces a critical moment in history with rising national debt, record deficit spending, and the challenge of the dollar's role globally. This is where we think something like XRP and stablecoin issues are going to step in. There is pressing need for new solutions that can secure the financial future of America and its citizens. Bitcoin has emerged representing both a challenge and an opportunity for America. It's one reason why we were heavily buying a crypto mining stock. If you listen to what Trump had to say, in my opinion, I think Trump's going to win. And I can see the frustration. People have definitely spat their lattes out at that. But that's not I'm not getting into the politics of everything. I'm just saying I think that's more probable in my opinion. And I think he's been very vocal in regards to what he wants miners to do and things like this. Yesterday, we also looked at the fact that we saw institutions. We had confirmation that institutions were buying that dip. Literally in a kind of crypto style in regards to the stock market. Morgan Stanley ETF moves a giant step for Bitcoin adoption. We also saw double the ETH volume that we saw on the previous day on Tuesday, the buying the dip. So Morgan Stanley financial advisors are now able to offer IBIT as well as Fidelity-wise Origin Bitcoin funds to certain clients. It's all moving in the right direction, ladies and gentlemen, and I'm very happy to be a part of that direction and hopefully helping you guys through what can be a very volatile market. But this is why we always take a broad context of things. We don't encourage anybody to trade crypto. I've been trading for a hell of a long time. I trade under or with people who have been doing it a hell of a lot longer than me. I understand the difficulties. I don't want that for most people. I think you're going to do just fine being investors. Invest in crypto. Don't try and trade it. With leverage, you will lose everything, and there are countless stories of people doing that. You make your money in the move. What we teach, certainly in my Patreon, and we're drilling the courses with everyone in the Patreon, is that we teach getting in for a bull, getting out for a bear. Looking for that accumulation, getting in for the bull, looking for that topping, getting out for the bear. And that's a philosophy that I think is going to serve most people well. That's it from me, ladies and gents. I hope you've enjoyed this content as much as I've enjoyed presenting it. And on that note, hopefully I'm going to see you all in tomorrow's video. Thanks a lot for watching, guys. See you in the next.